Alrighty, so again, I want to welcome you all to the Hurley Investments Financial Services Commentary for the 7th of November. It is Tuesday evening. I am up in Salmon, Idaho traveling, and I want to go through a couple quick things with you. Last week's webinar apparently was not posted. It will be posted Thursday morning or late Wednesday night. Problem uploading to the websites when you have no internet connection. Today I want to go over a little bit about Hurley Investments and why we do what we do here, how it's going to save people eventually. Our markets are ridiculously over. In fact, let's start off today looking at our market. Can someone tell me when was the last time you remember an index being oversold or overbought for 5 weeks? Now, I know this is the Dow, but I challenge you to, anyone remember a time when the Russell 2000, the Wilshire, S&P 500, the Qs maybe, the Dow? When was the last time you guys saw, and I'm going to highlight it because it's shocking, when was the last time you saw an index that looked like that? I can't even remember in 2008 seeing it to the downside looking like that. I'm a little shocked is what I'm trying to tell you. I'm a little shocked. I would have expected, in all honesty, a week at the most. But we've gone 5 weeks, an entire month. Tell me, what does that usually signify, at least in the past? What would an overbought index signify? I know we're in the new normal, but what would an overbought or an oversold? I'll ask either one. It's going to do the same thing. Overbought, oversold, what will that indicate? There you go. Good comment, Lance. A reversal, an imminent reversal. In fact, if we go ahead and take a look at the last week that we had one, I'm going to choose a red color. Here we go up at the top, and here was our reversal. Bounced up, reversal came down, tested the 50-day simple moving average. It's a reversal. What usually happens is you have this stretching. When you hear the market is stretched, it usually means it's a percentage from the 50-day, which sits at 22,671, to 23,557. You have 900 points here, or almost that 5%. Always at 5%, you get a reversal. You get a squish back down. You get some profit taking. You get too far away from the mean of the 50-day, and you get a sell-off. Now, it's not a big sell-off. In the past this year, we've only had almost a 3%, but it changes. The 3% down puts that mean or that stretching only to a 2% from the 50-day simple moving average. Anyone else? Can you tell me what this might mean if we're looking into the future here? Abraham said, when there's no friction, inertia extends its efforts. There is no friction, not yet. What else historically happens when you have this stretching of an index? Now, this is the Dow. It's only 30 stocks. I understand that. But what else normally happens if you're looking out into the future? Everyone running for the exits at the end once it's at a high, that could be true. Profit taking, that is also true. You know what, Lance? It's your day. It has to build a base. You're correct. Out into the future, if it's going to maintain its trajectory, it's going to build a base. The base can look like that. This base was a lower base with 3 touches right here, and it's not a very true base, but look how in the end of September it was bouncing off of the highs for this jagged or this range-bound base. Normally the bases look more like this, where it's more in a straight line. But it's going to build a base most likely. If we're going to start building a base with a little pullback here, because we had the little gap, I could see us using a round number for a base on the Dow. If we're going to build a base, what would that mean for our Christmas rally? What would it mean for that historical Christmas rally running, you know, dead in the water? Maud, couldn't have had a better way to say it myself. I am worried about our Christmas rally, and I'm saying that with Disney reporting here on Thursday, where it finally might break out of its ESPN, subscribers aren't, renewing, we're losing subscribers, which at most, as we found out about a month ago, is what, 0.8%, not even 1% of their total revenue. We could be into an issue where our Christmas rally has some worry in it. I'm not calling the Christmas rally dead in the water yet, but Maud, those are the numbers I will use. I'm looking at the S&P 500. It really didn't come off of its oversold position. Why can I not get my pen? I'll highlight. It came off for 4 days. Are we stretched? Definitely. Most definitely. We're at 25.90 down to 25.28. So there's 470 points. 500 would be that magic number where we're at that 5% and it's stretched and it comes back to that 50-day simple moving average. And again, if I was to go take a peek at the NASDAQ, 676, is not nearly as stretched actually. 300, and we're only 240, so we've got another couple percentages on the NASDAQ. But it's what worries me right now. And because it worries me, what do I want to be in to close out the year and to protect for a usual stagnant to down quarter in 2018, right? Usually people blow all of our money. We push ourselves to way overspend for people that don't appreciate it, right? For Christmas. We have some technical setups that are now talking about a stagnant to a possible pullback. I'm not going to say correction, but a pullback, one that at least could be over 3%, which we're well overdue because we usually will have 2 to 4 of those in a year. A correction of 10%, usually once a year. A pullback of more than 3 to 7%, usually you'll have once a year, and a correction every 4.2 years, which we're 5 years overdue. What do I want to be in? And it's funny because as I spoke with an individual earlier today, when I'm looking at what I want to be in banks to take advantage of a rate hike. Now, when I say banks, there are a couple that I think are important to me. I like Bank of America because it just hasn't come back like the other banks. I like Citigroup because it's been one that can go higher. It also has, well, it's just run well on mortgages. And then I also like a regional, which is Zions Bank. Pretty big bank here out in the West. Being a regional bank, I think you see them are more likely to they're more likely to be involved in construction or new business for building materials and so forth, which in my mind is where we would go for the first quarter. I like technology, and obviously I'm looking at Apple. You could be in NVIDIA. I will probably get called out of all my NVIDIA positions. Skyworks was a good one. And I don't know how to, Skyworks, where's Skyworks? SWKS. I would be looking at technology. And then last but not all, I look to an international exposure in Baidu. I got to run through Baidu, an amazing little while here. I ran $100 up, spending $8.80 on long put protection. Not only that, but then we had earnings, and I'm going to show you, because some people thought, Kevin, what are you doing? Right now you have no protection on Baidu. Not only that, I cashed it in, so people are freaking out. Okay, one person was freaking out. So what do we do at Hurley Investments? If I was to ask some of you that are here, tell me, what's my goal at Hurley Investments to do for you? What is our goal at Hurley Investments? Protect profits, watch the market, so you don't, there you go. We're always watching the market so you don't have to. Great answer. Increase the pie without asking for extra money. Hey, we dollar cost average, increasing the shares without asking for more money. I love it. Lance, good answer as well. Do our best to make up some of the downward movement. All three of you, 100%, you nailed it. So as I took a look, I got a little 3-day movement. So I sold my long puts. Do I have technical crossovers on Baidu? I sold my long puts on that line down. I will go ahead and I will erase it one more time, and I will point out I sold my long puts right there. Technical crossovers? Of course not. Yep, Lance said no way. Of course not. No crossover. Obviously, you can see with a big drop down, a 5 and a 20 is not going to catch up. No crossover. I do not have crossovers. So someone tell me why on those 3 days was that my trigger to take off long put protection? Bouncing out the 50-day. It actually, you could say that, Maud, but that, you know what, Maud, that is exactly correct, but that was not my trigger. Someone tell me, what is the black candle? What do you technically call that black candle? Isn't that an engulfing candle? The black candle, it's engulfing, it finishes lower than where it opened up, right? So someone tell me, for the Chinese candle people, what does an engulfing candle mean? Excuse me. What's an engulfing candle mean? There you go. Yeah, you're expecting a bit of a reversal. So Maud, yes, I did have support at the 50-day, but that black little candle, that black candle is an engulfing candle, meaning it finishes lower than where it opened. It usually means a bit of a reversal. So if I look at this engulfing candle, we had a doji the next day, and it actually went down like an engulfing candle is supposed to. Engulfing candle, hey, the sucker ran up. Neither one of these engulfing candles gave me a reason to sell off my long puts. Couple dojis, Hey, an engulfing candle, down, up, engulfing candle, up. Oh, look at what we have right here. I've got an engulfing candle and 2 down days, and then it starts an upward movement. I've got an engulfing candle for 2 down days, and then it starts an upward movement. I am literally just taking a little past history, saw an engulfing candle, had 2 days, yet that second day it started to finish up higher, and I took off our long puts. For some people that we had 1,000 shares, we bought extra shares of Baidu. For some people that only had 500, 300, 400, 600, I did not buy the 100 shares yet. I need one more down dip to be able to do that, so they're 100% paid for. But I look like a genius yesterday, right? But it didn't quite finish above that 50-day. So tell me your expectations. What's going to happen the next week with Baidu? What's going to happen the next week with Baidu? Hopefully go up. Maybe, but I'm looking for a little bit more than that, Maud. Realistically, what's my expectation for Baidu? Fill the gap. And that is also correct. Maud, you're right on both of them. But before it does either one of those, it's got to fight this 50-day. I am expecting something like here, where it's going to fight that support level. It's funny because usually if it breaks it, it comes right back up. And I thought we were in the clear on our engulfing candle day. But it's going to be a fight. Since it didn't go on that engulfing candle day, it's going to be a fight to head higher. It's had a great 2017, Abraham. It's up significantly for 2017. So, there's also, though, the reason I want international exposure in Baidu. Baidu is my first quarter, save my butt quarter, when the U.S. markets are flat to down. U.S. markets historically suck the first quarter. Now, it doesn't mean the last year or this year. Historically, the first quarter is a stagnant down quarter. We spent all our money, GDP numbers suck, companies are building up inventories again. It's just not a good quarter. People aren't moving. We're taking money out in that quarter to pay for taxes in April. It's not a good quarter. But Baidu gives me international exposure. It gives me China. It gives me what in February? What does Baidu give me in February? Gotcha. Baidu gives me a second Christmas. Baidu gives me the Chinese New Year's. Chinese New Year in February, it's like getting 2 Christmases back to back. Now, great question. What happens if it goes down and violently? What would you do if it started to go down and go down violently? If you just had shares and it started to go down and go down violently, what would you do? Add puts. Bingo. It's that simple. If it goes down and starts to go down violently, I'm going to add puts. Perfect. That's what I'm going to do. I'm going to add my puts. I could just sell the equity, but the problem with just selling the equity, Abraham, is that usually creates a taxable event. So, in all honesty, let's talk a little bit. Selling violently, where's the expectation that Baidu is going to fall down to? Trading at 243, I might not get it till 235 because that's my breakoff point. That's my support level. I'm not looking to add puts until we get a break below that 235 level. Where's the next stop down? Yeah, you could see 220 because of the little bit of support. You know, it kind of bounced around it. Kiev, possibly, but I'm not going to call 220. That's not where I would call support. I wouldn't call 215 now, but you have a justification. You've got a couple touches around that 215, but I wouldn't call 215 either. 201, there you go. My first sense, I would see if it stops filling the gap to the downside on our gap up. So it's 205, but it's 201. That's where I would be looking for a pause or a stop. In which case, I am trying to catch some of the 235 to 201 range where I'm looking to cash in some puts. And at that point, for 500 shares, there's probably a good chance I would be able to pick up that 100 shares for you guys as well. But correct, I'm looking for a big technical. I wouldn't necessarily play support and resistance because if we are seeing a significant movement down, a violent movement down, volatility, because there was some news about China and how Trump wants to do trade with China. I'm looking at 235 to 201. Someone asked me recently, well, Kevin, you're giving up $8. Correct. I'm giving about a 3%, 3.5% movement on Baidu to the downside, possible downside movement, 243.41 down to 235, $8.41, although that's probably a 7, it is. That is $8.47. If I were to take my calculator, $8.47 divided by 243.47, that's a 3.47. It's about a 3.5% play in the stock. Kevin, if it breaks the 50, you should add protection. Well, it didn't do me too good if I added it when it broke the 50 because it bounced right back up and is trading higher than that. And because of the big run up, this is where you got to understand your moving averages, right? We just went 100 points. We literally just went from 73.52 to 74.37. 100-point movement in 3-4 months there. 1, 2, 3, 4 months. 101-point movement. What's that going to do to the 50-day simple moving average? going into the future, even with these down days. What's the trajectory of the 50-day simple moving average? Got to understand your support and resistance lines, right? Got to understand what makes them. Tell me what the trajectory is going to be. Look at the last 50 days. Do you have more up days or more down days? More up days or more down days in the last 50 days? More up days. You're correct, Maud. More up days, so you're going to see that 50-day simple moving average still traject to the high side. It'll start to flatten out, but yes, it should still go higher. What about the 200-day? Where's the 200-day going to continue to move to? What do you expect on that 200-day moving average? With 100 points up in 4 months, 120 days. Correct, Lance. Yeah, it's going to continue to go up too. So really, it's that 205 to 201 range that I'm looking to pull the trigger on taking off protection. If we break the 235 to the downside, where I need to add protection. And yes, I did have a couple days of worry right here. I will not kid you. Baidu's making it for me. Baidu is the reason why overall we're having a net, a net really positive Hurley Investments return. And also, if I've told you before, I'm telling you all again, that first year is what it sometimes takes to get those collars in place with shares added to see the bigger gains in the second year. What's happened this week and why? We have not too many economic events. So earnings rules the roost. Good thing I can type so horribly. Rules the roost. Consumer credit, big, kind of important for me. Consumer credit came in at $20.8 billion versus an estimated $18.3 billion. Which tells you what? What's consumer credit tell you? What consumer credit tell you? People are spending. There you go. And not only that, what are they probably spending on, Maud? Using Visa, hopefully. There you go. So for some of my people on Visa, time to roll short calls out and up. It will be a leap roll to open up Visa to the upside. And some people I'm going to have take some profits, but others, again, we're going to roll out and up and off we go. Or I'll get called out in December and see about getting back in on a pullback in the March, April earnings when, again, not too many people are using their credit card and they basically underperform. All right, we've gone over charts. Still, I'm going to say 2% on November until I'm told otherwise. Earnings, they're ruling the roost, but we don't have quite the same earnings. We are going to start the retail on Thursday, Dillard's, Kohl's, Macy's. For me, D.H. Horton, which I just protected at 44 and 45 today, and Disney. This might be our push on Disney. I think ESPN will not matter, that they're going to do this merger with Fox. So right now I have November 97.50 puts on Disney. I might roll them up if they get to 105. But this could be our recovery on Disney. You also have three big events. Thor Ragnarok is out, Coco, and the Star Wars Return of the Jedi, or The Last Jedi, actually, is what it's called. Not much by way of economic reports. I'm still staying away from international. Not much international that I was paying attention to. How am I looking to trade? Protective puts for earnings on D.H. Horton and Disney. And with that said, we can take off Apple and American Outfitter Brands Corporation. Clorox is off the table. Facebook and Soda. These are my last two that I'm really paying any attention to. I did find some pretty interesting information on how the tax bill could help you, how the tax bill could change how you save for retirement. Bull run hits bumps, but we could see another 10% by market end, and this one was back to October 29th. I thought it important to see a very bullish stance on our stock market. The House GOP tax plan is explained. I have that there. Any questions you guys have that I can answer for you? Any questions you have that I can answer for you? All right. Are protective puts wise? So, Lance, if I can go, because obviously you've got some of these positions, right? Are protective puts wise? So why am I using only protective puts for earnings? Now, I'm going to go ahead and I'm going to teach you guys a little something. A collar trade is sometimes stock ownership. It's sometimes a covered call. It's sometimes a protective put. It sometimes is a collar trade of stock ownership, long put, and the short put. It might be a ratio of long puts to stock ownership. You might do an exploding collar, which has long calls, long puts, a far out in time short call. There's a lot to be involved in a collar trade if you adjust it. I still remember a comment with someone, well, you don't do a collar trade like you said you're going to, on someone that obviously had no clue how to invest or trade. It was just put the trade on and it does it by itself. And it was a unique experience. And he was a customer that I was willing to give up pretty quickly. Sometimes, in all honesty, $75,000 just isn't worth investing. With that said, why am I only protective puts for earnings? My answer, Lance, to you would be, go look at the trend of the market. Well, Kevin, you just said that we might have a flattening. We got to build a base. We might have our Christmas rally dead in the water. These are things you said. Yes, I said them. Yes, I'm watching for them. But the trend is still bullish. So I am protective putting D.H. Horton because of the run up, and I've got profits to protect. I'm protecting Disney because Disney analysts and investors suck. All I pay attention to is ESPN, and a 0.8% of their gross profit, no, it's 0.6% of their gross profit, 0.8% of their net profit is at risk with the losses on ESPN, and they're overreacting. So I am protective putting because I'm following the overall market trend. And you're welcome to ask another question there, Lance, if you want to. Do I think Disney will recover? Yes, I do, Mod. Obviously, 110 will be the point where I'll look to add more protection if it can't get above it. But if you do a forward valuation 22 times earnings with a forward PE ratio, you come up with $140 a share. So last year it used to be in the 32s. We're up to 140. Eventually, analysts will pull their heads out and common sense will prevail, I hope. What happens if you don't have any puts on, you wake up and the S&P futures are down 50? Mod, then we've just taken a pretty good hit. With that said, I still have about half of my positions with protective puts on. Apple has protective puts. Visa has deep in the money covered calls. Disney has protective puts on. Baidu is one of my core positions, does not, and Facebook's collared. So 4 out of my 5 core positions have protection on. So in all honesty, what if S&P futures are down 50? 20% of my portfolio is going to suck rocks. 80% of my portfolio is going to be making up some of the downward movement. I'll be able to beat the market in that scenario. And Mod, in all honesty, that's a very valid question. And if I can use that question just for a minute, anyone that lived through 2008, the question Mod just asked is a past experience question. And it is more than valid. And this is more than valid for anyone that's above 50 years old. It's a question that's valid for someone that's close to retirement or trying to live off of their retirement savings that's in the stock market. But it's not necessarily relevant. Kevin, how can you say it's not relevant? Well, we're 5 years overdue for a correction. For 9 years, our stock market's been in an upward trend since 2009, so I guess that's 8 years. It's an important question. It has experience behind it, but I'm going to tell you that it's not necessarily relevant to the market that we're in. If it happens, would it become relevant? Of course. And for the Mod that's here, for myself that's here, it's a great question. It's one with concern and worry of someone that suffered through 2008. But it's not relevant yet, which means, Mod, as an investor who has to make money for clientele, it's on the back burner. It's always going to be in the back of my mind. Well, Kevin, what if this happens? What if that happens? What if this happens? That's why I have certain points in play. But I'll be honest with you, if a 50% drop happened on our S&P, with the way the buy the dippers have been, it better be a buying opportunity at least the first time that it happens. And boy, with buy the dippers better at it or come back in, because if I go to your next question, above questions assumes earnings are over. Yes, if earnings are over, I'm keeping my long puts in place. I've got some put calendars like on Bank of America. But if I need to add protection on, I usually am not adding protection on till mid-December, till I start to see the end of the year sell-off go through with funds. That's when I start to add protection. I try to go all the way out to February to get me through December, January. So you'll see Hurley Investments usually do a round of protection buying sometime in the first or second week of December. Yes, that's partially so we can go and enjoy our Christmas as well, but that's also because usually we'll start to see a sell-off, low volume, more volatility. Even if the stock market trades sideways, your long puts with more volatility due to less volume. Retail traders are only in usually during that time period. You can get away with being okay. Great question, Mod. Now you're giving away my age. Hey, I said maybe over 50, but again, it actually goes for anyone that's in the stock market over 50. You look at the market differently. Your 20 years of letting things go from 25 to 30 years old through the 50 year, you've just used 20 years of your investing time frame, 25 years sometimes. you've got somewhere between 12 to 15 more years where at age 50 you look at the market differently. You look at it, in all honesty, with some concern on what if. And what if is something that, Maud, I always look at. In fact, myself, Keeve, Michael, Jeff, Jeffrey Dunyan, there are a bunch of people we talk about it all the time. But yes, Jeffrey T. Smith, Keeve Bybee, Michael Verdon, myself, we spend our time talking about what if scenarios, so our game plan's in place. So you can give me a call and we'll say, hey, at this price point I'm going to do this, at this price point I'm going to do this. We all hold ourselves accountable to what we're going to do for those what if scenarios. The what if scenarios have not been relevant for 8 years though. So at this point in time, we're still playing the trend that we have, and I hope at any age over 50, people would look at their money significantly more. They'd look at their money not so much for the growth, but how to maintain it or retain it. Growth will come eventually, unless you take a big hit or a loss. Mon, I appreciate you. Thank you for coming to answer. It gives Lance the chance to hear someone else. Great questions, Mon. Thank you very much. Any other questions you guys have? So Lance, so this year your big money, $500,000 or more, is making the returns, where last year it was the small money. What changed? All right, so the small dollars, the $250,000 less last year were my big winners because they were in Ford and NVIDIA, and NVIDIA took off. This year, my 250 to 700, 750 are doing okay. We're close to matching the market, if not matching it. We're doing it with very little risk in a very uncertain market. But my big guys who have hordes of Baidu, Facebook, Apple, Visa, yeah, I mean, those are my 25% plus winners this year. Who's doing the worst this year? Well, in all honesty, it's my under 100,000 group. They're the big winners on that 32 to 34, 32 to 33% last year. They're not my big winners this year. They're my stagnant ones this year. Ford just hasn't moved, and we're locked into NVIDIA. It's a 2-year. We'll be out of that in January, and I'll find more money to put them into. But Lance, the key that I think needs to be understandable, investing is a process. Trading is trying to get rich quick, in my opinion. Investing is a process. And it's a process that I'm going to say this with all due respect. It's a process that I have learned through experience that it's not important on how much you make on any one given trade, quarter, or year. It's a process that someone's going to have enough money to retire on when retirement comes. So I've got enough money under management where I no longer care to a certain degree about a trade, a quarter, or even a year. My goal is to get people to where they need to be at for retirement. And because I'm not that big, I can still focus on an individual versus a goal or a percentage or a return. Lance, is that making any sense? In fact, I should ask everyone, is that making any sense? Abraham, my audio is still great on this end, so I think that might be on your end for your audio. But back to what I just made a comment there. Does that make sense for everyone? What I just said about trading for retirement versus a year, a goal. Okay, thank you, Lance. Although, Lance, that's a pretty weak answer. Yes, it does, kind of. So let me make the comment again. when people are spread trading and are going to follow an advisory service, they need to do every trade and stay in it in a year. If you're in it just for 6 weeks or for the first 4 trades and they go south, you miss the boat. You're trying to get rich quick. Any advisory service, you have to give it a year to make it work. You have to be able to get into every trade. You've got to position your portfolio where if you have $100,000, you're using 3%, maybe 5% per trade. I laugh, and I got to have these conversations with these people that get into an advisory, get an education, and they're out in 4 weeks, and I'm thinking, you idiot. You gave yourself no time. And time is the #1 most important understanding when it comes to investing and or trading. I don't trade. I'm an investor. I want to be like Warren Buffett and amass huge amounts of shares of stock. And there's 2 ways to do that. To invest huge amounts of money into your portfolio, or to be able to make a side movement to 100% pay for more shares down the road. There's no time frame for that. Options have time frames on spread trades when they expire, and time is your ally. Time is what's going to take care of you. The time that you're limited to is when you need the money. Well, if you need the money, you need it, and then time becomes more important. Otherwise, we're trying to grow this as much as possible, whereas I've got enough money in management where I make a great living, and I no longer care about a single trade, a single month, quarter, or even year. I have a bigger picture I am looking at, Lance, and that picture is still where I can look at individual people and say, hey, I can get them to retirement here. Hey, I think I've got someone here today that I'm able to say, hey, I understand you have an insurance policy and you've got a problem with it. I can have those candid comments or questions or returns, and I think it obviously makes a world of difference. And I just saw 2 right on Kevin's, and thank you for the explanation. So Vernon and Lance, greatly appreciated. All right, guys, anything else? I just stepped off my soapbox. Kevin, on what about my case? Okay, so Al, I'm gonna I'm gonna hold off on that one because I don't want to do that in front of everyone. If that's okay with you, I'd rather talk one-on-one if we can than go. And yes, well, you know, Al, it's always fair. Things didn't move, but I know you've looked at some things and went, man, if only I had a little extra time. I think it was Visa that took off, and you know, it is what it is. But I'll hold off on your question for a one-on-one conversation. Abraham, Micron, how do you see them? Okay, so Micron, Abraham, I see as the most ridiculous pain in the butt stock in the world. It doesn't move on history. It moves on whatever it wants to move on, which sometimes is news, sometimes is a semiconductor. Micron and me are not friends. With that said, if you're talking about WDC, which is the old SanDisk, Western Digital. Western Digital bought SanDisk, and they don't have it together yet. They haven't streamlined what they're doing. Their chart for a year is ugly. It's not a good chart, and it's and it is what it is type of thing, you know. They bought the SanDisk, and they haven't been able to incorporate where it's at. So for myself, no, I'm not a Western Digital fan. Both of those, if you brought those to me, I'd say let's get them out of your portfolio immediately. Neither one is a money maker or easy to follow. I do not know LRCX. Lamb Research, that better be a winner for you. It's had a heck of a run from 120 to 209. I'm not familiar with it, but if it's fundamentally sound, boy, that's a great trajectory, and it still might go higher. Good position. Take a note on how it reacts when it's oversold. And AMAT. Before I say anything, Applied Materials also has a decent chart, but I don't think well, I don't have an answer for you on Applied Materials. I don't have even anything that I can have go for you. No on Applied Materials. So the first two, definitely, in my opinion, I would be out of Western Digital in my I would not be paying attention on I don't know how to answer you for AMAT and LBCX. If it still has upward movement and fundamentally sound, keep going. Al, what are these numbers on swings on your charts? Highs and lows, Al? Let's take a quick check here. Highs, lows, is that what we're talking about, or did you see me just adjust my chart out to a year? Yes, so how I set up my chart is all based down here on the bottom. Let me erase my drawings. So you can pick the years, you can pick the months, and make it even a day chart if you want to. There are some predefined ranges. I will usually set mine up for 6 months. I keep candles for 6 months. I want a landscape. I click on the price label so I see price labels. And for myself, my color vision, I am basically color blind, so I do my color vision impaired. Jeffrey likes to add he likes to sometimes add extra bars, so extra bars up here in the one. Jeffrey will add extra bars. He usually does 5. I don't care. I don't need an extra bar. I'm not going to be typing anything, but usually my first chart I look at is right here. And I'm going to look at what big money looks at. Simple moving averages, the 50 and the 200. I do not pay any attention with the 100. That is a useless, it's just a useless tool. No one looks at 100 except for the wannabes that are on, TV. There's no big investor that pays attention, so I'm paying attention to 50 and the 200, which are big institutional trader type lines. And then what I usually will do is I will right click up here and I will duplicate this chart and I change it to exponential moving, the 5 and the 20, and I also throw in a Williams %R in case my RSI or MACD is laying on each other. So right now on AMD up at the top, pretty flat RSI. Definite crossovers come way back here in September. We're just turning on the MACD, but I still see upward movement on the Williams %R. So that just verifies if I was on AMAT, technically speaking, I would still stay in it. I wasn't able to give you, Abraham, a comment on AMAT because I don't know enough about applied materials to talk about them moving forward. So hopefully that was helpful there, Al. All right, guys. Hey, I've got another phone call coming up. I appreciate your time. Guys, have a wonderful evening. Al, again, I've got a couple phone calls now, but if you do want to talk, you got my number. We're always welcome to call me. Even if it's just to shoot the breeze on anything that I can be of help for you, or another idea on something, shoot it my way. Guys, take care. Have a good one, and I will talk with you soon. Bye-bye.